Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the main problems on depreciation. The last few videos I have completed, two videos I've completed on the complete theory of what is depreciation, what are the reasons for providing depreciation, what are the methods of calculating depreciation, and what are the journal entries to be passed for recording depreciation. All these things in detail I have explained in the first two videos. Then 4 videos I have provided on short problems and MCQs on this depreciation chapter. So now these main problems I am going to start. So before starting, you must have a printout of the problems which I have given in the link under my description. So whenever you watch the problems, always you must have a hard copy of the problems. Then only you can be able to understand the complete solution. Otherwise, if you don't have the problems, it will be highly difficult. Don't skip in between. Watch the video till the end to get the complete command on this topic of depreciation. Take a screenshot of the solution of the first 4 problems on depreciation. Then I'll explain each and every point in detail. Now, see the first problem. Problem number 1, main problems. Anwar Healy produces his accounts to 31st March each year. Anwar Healy is the sole trader and he is closing the accounts on 31st March each year. He bought a motor vehicle on 1st April 2014 for $22,000. Depreciation is to be charged at 15% each year using straight line method. In straight line method, the annual depreciation will remain constant, same every year. So what is the cost of the vehicle? 22,000. And what is the rate of depreciation? 15%, 15 by 100. So 22,000 into 15 by 100, you will get 3,300. So 3,300 is the annual dep and it will remain constant every year. Then calculate, 3 bits are asked, A, B, C. First A bit. Calculate the depreciation charge in his accounts for the year ended 31st March 2015, 31st March 2016 and 31st March 2017. Actually, when he has bought the vehicle, it is given 1st April 2014. So first question, calculate the annual depreciation for 15, 16 and 17. You can see Anwar Healy, annual depreciation as per SLM, straight line method, 15% of 22,000. So 22,000 into 15 by 100, 3,300. Now depreciation charge for the year ended 31st March 2015, 2016 and 2017. Every year it will remain same. 3,300, 3,300, 3,300, that's all. First A bit completed. Now what is asking B bit? Calculate the carrying value of the motor vehicle as on 31st March 2017. Carrying value means the cost minus total depreciation or accumulated depreciation till date. Till date, what is the accumulated depreciation? So cost minus accumulated depreciation is equal to carrying value. That's what we have to find out. B, carrying value at 31st March 2017. First of all, what is the cost of the motor vehicle on 1st April 2014? So it was purchased on 2014, 22,000. From this we deduct accumulated depreciation or total depreciation up to the last date. What is the last date? 31st March 2017. So we have closed the accounts on 15, 16, 17. 3 years depreciation, total depreciation we require. So first year 3,300, second year 3,300, third year 3,300. So total 9,900 is the total accumulated depreciation. What is the cost of the vehicle? 22,000. So 22,000 minus 9,900, 12,100 is called the carrying value on 31st March 2017. That's it. Now see it. Show the journal entries for the depreciation charge over the 3-year period. In the theory video, I have explained you completely regarding the journal entries for providing depreciation. The journal entries, income statement debit and provision for depreciation credit. This is the entry for providing depreciation. Again I repeat, income statement debit, provision for depreciation credit. Here are the journal entries. The journal entry for 3 years. First year end on 31st March 2015. Year begins on 1st April 2014. The vehicle was purchased on 1st April 2014. The first year ends on 31st March 2015. So 2015 31st March. Entry is income statement debit, provision for depreciation credit 3,300. 1 year over. Same entry for second year, next year. Next year is 16. After 15, it is 16. So 31st March 2016. Again same entry, income statement debit, provision for debt credit. Same 3,300. Next year 2017, March 31st. Same income statement debit, provision for depreciation credit. 3,300. That's all. First problem completed on debt. Main problem. Now, second problem. Equipment was bought. Equipment is also one of the non-current asset. Equipment was bought for $76,000. It had an estimated useful life of 5 years, after which their scrap value is expected to be $16,000. The equipment cost is $76,000. The life is 5 years. At the end of 5th year, it will be scrapped. It will be sold away in a scrap. So it will fetch 16,000. Use the straight line method to show you are working to calculate the annual amount of debt to be charged and annual percentage rate of depreciation to be charged. So in this problem, it is simply asking you what is the annual depreciation according to straight line method. So under straight line method, sometimes percentage will be given, a fixed percentage. Sometimes cost, life and scrap is given. So in this problem, cost of the asset 76,000, scrap value 16,000, life is 5 years. Annual depreciation as per SLM, straight line method, cost minus scrap value divided by estimated useful life. This is the formula to calculate annual depreciation. The cost is $76,000, scrap value $16,000, life is 5 years. We'll get $12,000. So every year $12,000 is the depreciation on equipment. It will remain same every year. First year, second year, third year, fourth year, fifth year. 5 years. Next, second question. What is the annual percentage rate of depreciation? We have to calculate what is the annual percentage rate. So for that, we have the formula annual depreciation divided by cost minus scrap into 100, because we need percentage. So what is the annual depreciation? Just now we have calculated 12,000. So 12,000 divided by 76,000 minus 16,000. 76,000 is the cost, scrap is 16,000 into 100. So 12,000 by 60,000 into 100, 20% is the annual percentage of debt. That's it. So 2 problems completed. Now see the third problem. Jason owns a hairdresser's salon and he bought a new set of chairs on 1st April 2016 for $1,000. He calculates depreciation using the reducing balance method at 20%. On 1st April 2017, he bought a new air conditioner for $8,000. The 2 assets he is having. First asset, chairs. Chairs will come under furniture. So depreciation is to be calculated. Similarly, air conditioner is also one of the fixture. Again, depreciation is to be calculated. On chairs, it is reducing balance method. On 1st April, he bought new air conditioner, $8,000. He calculated depreciation for the delivery van. There is a printing mistake. There is no delivery van. There is air conditioner. So you just to strike it off delivery van and write down air conditioner. So he calculates depreciation for air conditioner at 20% using straight line method. On chairs it is given reducing balance. On air conditioner it is given straight line method. Calculate the entries in the income statement for the year ended 31st March 2018. See here, the chair was purchased on 1st April 2016. So 16 to 17, 17 to 18. 2 years depreciation we have to provide on chairs. AC, air conditioner were purchased on 1st April 2017 and we are closing the accounts on 31st March 2018. So 1 year. So 1 year depreciation we provide on air conditioner. 2 year depreciation we provide on chairs. And we have to complete the journal entries. What are the journal entries? See here. Entries in the income statement for the year ended 31st March 2018. First we calculate depreciation on chairs. When the chairs are purchased? 1st April 2016. The cost of chairs on 1st April 2016, $1,000. First year ends on 31st March 2017. Depreciation up to 31st March 2017. 20% on reducing balance method, that is what given in the problem. 20%. So what is the cost here? 1,000. 1,000 into 20 by 100, you will get 200. 200 is the depreciation for the first year on chairs. Deduct 200. 800 is called the carrying value at the end of 1 year. Now second year depreciation, 31st March 2018. 17 completed. Now we are in 31st March 2018. Now 800 into 20 by 100. Because we are following reducing balance method. Here I will write down reducing balance method. And for air conditioner it is straight line method. It is given in the problem. So here 800 into 20 by 100 you will get 160. Second year depreciation on chair is 160. Deduct, you will get 640. This is the depreciation on chairs. Now we calculate depreciation on air conditioner. When the air conditioner were purchased 1/4/2017, given in the problem. So what is the cost of AC on 1/4/2017? 8,000. We are closing the accounts on 31st March 2018. So here depreciation up to 31st March 2018. So 8,000 into 20 by 100, 1,600. Only 1 year. Because we are closing the accounts on 2018. So after deducting 6,400. That's all. Now entries. Depreciation on chair is 160. Current year depreciation 160. And depreciation on AC is 1,600. We want current year depreciation. So current year dep on chair is 160. Current year dep on air conditioner is 1,600. Now current year, what is the journal entry for this depreciation? The entry will be income statement debit, provision for debt credit. Already in the first problem I have explained you. Income statement debit, provision for debt credit. But we have two provision for debt. One provision for debt on chairs and another provision for debt on air conditioner. So entry will be income statement debit and provision for debt on chairs 160 credit and provision for debt on AC 1,600 credit. So we are crediting provision for debt on chairs, provision for debt on air conditioner, both credited. So you have, if you add up 160 plus 1,600, you will get 1,760. So income statement is debited 1,760. That's all. First bit completed. What is the second bit? It is asking complete the non-current assets section of Jason's statement of financial position at 31st March 2018. How this non-current asset will be shown in the statement of financial position. In the statement of financial position, we have two types of assets, non-current assets, then current assets. So in this problem, it is simply asking you how the non-current assets will be shown in the statement of financial position. Now, Jason's statement of financial position, non-current assets. So I am showing separately assets, cost, depreciation, carrying value. In this way we have to present. This method we have to follow in presenting the non-current assets in the statement of financial position. The two assets are the chairs, air conditioner. What is the cost? What is the cost of chairs? 1000. And what is the cost of air conditioner? 8000. The original cost will remain same. The original cost of chair 1000, original cost of AC 8000. Now depreciation. The total depreciation, accumulated depreciation on chair. See here. Accumulated means total. The first year depreciation is 200. And the second year depreciation is 160. So 200 plus 160, 360 is the accumulated depreciation. So 1000 is the cost of chairs, 360 is the total depreciation accumulated. So 1000 minus 360, 640 is the carrying value. This is the 640. Carrying value of chairs. Then come to air conditioner. The cost of the air conditioner is 8000 and accumulated depreciation is only 1600. Only 1 year depreciation we have. So 1600 is the debt. So 8000 minus 1600, 6400 is the carrying value of AC. This 6400. This is the presentation of non-current assets. Presentation of non-current assets in the statement of financial position. That's it. So 3 problems I have completed. See the 4th problem. John owns a motor vehicle repair company in Bangkok. He recently purchased a new van to help with the running of his business. When van is purchased for using in the business, it's a non-current asset. Depreciation will be provided. The van was purchased on 1st Jan 2016 at a cost of $20,000. John wants to calculate debt using reducing balance method. He has provided the rate of 40%. Calculate the annual charge for debt for 2016, 2017 and 2018. So 3 years depreciation we have to calculate. And the method of debt is reducing balance method. When it is purchased 1st Jan 2016. See here. Calculation of annual debt for 16, 17, 18, 3 years. The reducing balance method we are following. The cost of van on 1st Jan 2016 is $20,000 given in the problem. Now, one by one depreciation we deduct. The first year ends on 31st December 2016. So December 31st 2016. So 20,000 into 40%, 40 by 100. 40% means 40 by 100. So it comes to 8,000 debt for the first year, 2016. Now second year, 2017, 31st December 2017, 12,000 into 40 by 100, 4,800. Deduct 4,800, 7,200. Now third year, 31st December 2018. So 7,200 into 40 by 100, 2,880 is the debt for the third year. So 16, 17, 18. 3 years depreciation we have calculated. So in the reducing balance method, the depreciation will decrease each year. In straight line method, the depreciation will remain constant. See here, 3,300, 3,300, 3,000, every year it is same. Because it is SLM. But here it is RBM, reducing balance method, it will diminish. So first year how much debt? 8,000. Second year 4,800. Third year 2,880. See here. Depreciation for 2016, 2017, 2018. 8,000, 4,800, 2,880. That's it. So in this video, I have explained the 4 problems, first 4 problems. Inshallah, in the next video, I'll continue with the 5th problem.